Hello, everyone. Welcome to another podcast of the SCV Law and Life podcast. Today we have Michael DeSantis of Farther Investment or Farther Financial, I should say. Welcome, Michael.
Hello.
Nice for you to join us today. So let's start by saying, tell us about yourself a little bit, what you do with Farther Finance. Who are they? How long have they been around?
Well, that's a lot of questions. Can we start with just one?
Sure, absolutely.
Okay, sure. So I just moved over here to the Santa Clarita Valley last year with my
Okay.
wife and 2-year-old, who's starting preschool next week, which is crazy to think about. But yeah, my wife grew up out here, and my mother and father-in-law that still live out here almost 40 years now, and really enjoying just getting to be a part of this community. I think it's really special out here. It's one of the hidden gems, suburbia cities of Los Angeles. So just really happy to be here. I work from home, based in San Francisco is Farther Finance. We just got named actually the number one fastest growing financial services company in the country, which is really exciting, especially when you join it as a startup and have some equity in the company. But yeah, it's very exciting. I think people are catching on and finding a new wave of what the industry has to offer, and that's what we do. And that's, it's just very exciting.
So let's start with this. Your 2-year-old, boy or a girl?
Boy, his name's Ezra.
Are you guys nervous?
Are we nervous
about him going to preschool? Yeah.
Yeah, you know what? It's so bittersweet. I feel like you want him to be small and cute forever, but you also want to see him grow and start having conversations.
I remember when my wife first dropped our first one at preschool.
Yeah.
She came home crying. So
yeah, man. We went for like a meet and greet, and he's like, put me down, and ran over to the playground and started playing with the kids. So that's a good sign.
That's a good sign.
We feel really good about that. But then we need to go home and cry ourselves.
I know. All right. So, but that's what we're here. We want to do financially, be independent. Not just us, but our family and our kids. So tell me, how long have you been with Farther?
So I've been a part of Farther for almost 2 years now, October 2023. And before that, we came over from Goldman Sachs, my team and I, and we were part of a kind of an acquisition, chaotic type of like everybody staying or leaving. There were a lot of people who left Goldman Sachs after they sold our division, our fiduciary advisory division. And we didn't want to be a part of this massive independent company called Creative Planning. Their CEO was a bit toxic, and that's not what we wanted to be a part of. Farther it was just a very easy decision for us. Our leadership team is incredible, and they're really just doing things differently, and that makes a lot of sense for the future of our industry. And that's why we just have so many advisors from other companies coming over to us, which is generating that growth.
So it sounds like although you've been with Farther for 2 years, your experience goes farther than that, right?
Yes. I've been in the industry for almost 11 years now. Started at a small firm out in Torrance, California, South Bay, lived in Hermosa Beach for a few years. And from there, we got acquired. Our owner sold to a larger independent company called EP Wealth Advisors, which is a large company out there. I think they have about 30 billion under assets under management now, which is incredible. But from there, I decided to take an opportunity at Goldman. and then from Goldman to farther. So it's been a journey.
And I think you did say that Farther is now one of the fastest growing financial institutes. Is that what it is?
Yeah. So private financial services companies, so RIAs, not including like the big names like Goldman or Morgan Stanley. Those are wirehouse companies. But for private, non-publicly traded companies, we're the number one fastest growing financial services company. So pretty proud about that.
Okay, that's great. So I'm going to now just talk about the big gorilla in the room. What's going on in the world financially? What do you do? How can you help?
Yeah. So a lot going on in the markets. I think a hot topic right now are interest rates and inflation, right? And we have been preparing for this moment for a long time now. Have positioned our clients appropriately, but I think people are just very nervous about the impacts of inflation and the tariff policies. One thing that we have been doing for quite some time now in preparation for this moment is position our clients with fixed income that is suitable for a lowering rate environment. The Fed has been talking about and flirting with us about lowering interest rates for a long time. And when you position yourself with bonds in particular that have a little bit of a longer duration, not long duration, but not short duration, you are able to position yourself for some capital appreciation on top of locking in a higher rate. While interest rates are high, we want to lock in that rate a little bit longer term than the short term stuff. And then when the rates go down, which is likely to happen now in September, then your asset is going to increase in value as well. So that's what we've been positioning for a long time. It's just been a pretty long delay until this moment. But for tariffs as well, that's going to cause inflation. And we're seeing recent reports now that is the case. And I think the Fed chair is still pressured to lower rates on top of this bad news, which is a little concerning. So that's why we're cautiously optimistic and trying to hedge in all four corners of this problem.
So one thing I've noticed is that I know initially when the talks about tariffs came out, the stock market was freaking out, but it seems to have stabilized over time, and they know how to deal with it. Does that sound about right?
Yes, it's the market. The market is reflecting a lot of positive things going on in the markets. The public companies have been reporting positive earnings. The tech industry, the Magnificent Seven of the S&P 500, have particularly the AI wave. These companies have really driven the market indices forward and have just kind of put the team on their back per se, and have really performed well. And lowering rates, the thought and plan of lowering rates will increase equity values as well, lower borrowing costs, which is going to drive economic growth.
Okay. So tell me about you. What do you do as a financial planner?
So as a financial planner, I really try to hone in all of the knowledge and try to make it all make sense for my clients. I'm a personal wealth advisor. So what my clients, when I talk to a new client, I ask them a lot of questions about what you want to do with your life. And all of these financial goals, and we can help you, kind of set those specific goals. We tailor financial strategies and solutions that make sense and are efficient in growing, preserving, leaving a legacy. Whatever you want to do with your life, you have your finances make sense for it.
Okay. Do you do you tailor every? It sounds like you tailor everyone's profile separately, and
Oh,
their
definitely.
profile is going to be differently. How do you go about assessing somebody's risk analysis, and how much are they comfortable with the risks out there?
Yeah, so it's two factors. I try to really listen in on, when I ask personal questions in person over Zoom, and how they react and how they respond and how they feel deep down about investment risk. And then I give them a questionnaire. We have a questionnaire that we give to our clients, that kind of asks less granular, like how would you feel about a 20% drop in the market? None of that. It's more of like hypothetical questions about general risk, and that gives us a better idea of just kind of where we want to fall on the spectrum.
Okay. Do you think it's ever too early or too late to start planning for your future financially?
It's never too early. It's never too early, and I try not to fall victim to it's never too late. But it's everyone's different. Everyone has a different situation, has done different things with their lives, and I really try to just treat every situation different and try to make the best of it.
Okay. So let me ask you this. So am I correct in that if you start earlier, your what you guys may want to do with the profile might be different than somebody who starts later on, right? So maybe you
Yeah,
want to be a little more aggressive when you're later on to kind of get them
yeah,
to push.
generally.
Yeah.
Generally, yes, but that's not really. I try to also hone in on the personality as well
Okay.
and
Okay.
the person, because I have some young clients who are very skittish, very conservative. They don't like investing, particularly, and so we're just kind of dipping our toes in for them, but not too much. And I try to encourage them to look at the long run and the long time horizon and how risk can be mitigated with longer time horizons. However, again, everybody's different. Yeah. So I try to treat everyone differently, but yes, generally longer time, you want to be taking more risk and vice versa.
Okay. And then you're a fiduciary, right?
Yes, like you. An attorney is a fiduciary to their clients. Uh, I'm a fiduciary to my clients. However, that standard is not legally, required for everyone in my industry. So we really take pride in it, and say, hey, we're going to hold ourselves to a higher standard, even though we're not required. We just think it's the right thing to do, to always act in the best interest of our clients. It just makes sense. And it's unfortunate that it's not a legal standard. Hopefully that'll come to fruition down the line.
Okay. So as a fiduciary, obviously what you want to do is the best interest of your client, not for you or your company.
Correct.
Like some others. Okay.
Correct. Okay. Yeah. That plays in so many different aspects of what I do, because I'm a big believer of vested interest. Like, what is this person trying to sell me their services? What's their vested interest? Obviously, they're trying to make a living, right? Everyone's trying to make a living doing what they do, selling their services, products. However, is my money going toward this person, and is it vested for him or her to do what's best for me? And that's not the case for a lot of advisors out there, because there's a lot of investment companies that come in backstage per se, and say, hey, we really want to have you, the financial advisor, sell our products, and we will give you an incentive to do so. And the financial advisor says, okay, great. I will get a commission from you, the investment company, and sell them to my client, get a commission from the investment company, and collect a fee from the client at the same time. That is a conflict of interest. That is legal to this day. So that's something we do not do. All of our investment advice and investment solutions are completely objective. We vet. We have people who are solely focused on helping us make the best decisions for our clients as far as investment solutions go. What's out there? We always are looking for the best of the best, and are not taking a cut from anyone else but our clients.
Okay, well, that's definitely different. I like to hear that.
Yeah.
Is there any one advice you could give to anybody who really wants to think about, at some point retiring in the future?
Yeah. Let's. I would definitely say have a plan. Concrete plan. Be realistic with how your lifestyle is and what you want your lifestyle to be, and run the scenarios, quantify it. I think the value of having a financial plan, a detailed financial plan, is extremely important for people planning for retirement or in retirement. Because things change when your investments go up and down. You got to relook at your plan, even especially when you're living off of your investments. So, yeah, having a concrete plan is very important.
I mean, I'll be honest with you. It took me years and years after becoming an attorney to just sit down and talk to a financial advisor about how to get to my retirement age.
Mm-hmm.
But once I did, I felt a lot better. Things seemed a lot clearer. I had a plan. So I totally agree with you. I think anybody who's watching or listening to this, the best thing to do is just get started. Just sit down and have a conversation with Michael, and he'll walk you through it, and he'll be honest with you what you need to do and not to do.
Yeah, of course. I appreciate it.
Sure. So one question is there anything else you want to add to the podcast before we kind of wrap it up soon?
Not really. This was great. I really appreciate you having me on.
Okay, so one question I'm going to ask every of our guests is, if you could go back and tell your younger self something like an advice, what would you tell your younger self?
Oh man, that's a good question.
And it could be about anything. It could be financially, but it could be anything.
Yeah.
But however, hold on.
Yeah, go
You cannot say I would go tell my younger self to buy Google stocks. That doesn't count.
No. Hindsight is always 2010 in that regard. But I would say try to be more present. Enjoy the moment. Try not to focus your time and energy in very finite, particular areas of your life, and try to just seek balance and enjoy the moment, because it goes by so fast.
Yeah, believe me, I know.
Yeah.
Okay. Yeah, I mean that's important, especially when you have not a 2-year-old. How old is Ezra?
2-year-old. 2-year-old.
It is okay. Well, I also noticed you're a Dodger and Lakers fan, which is good because I got Kobe's picture right behind me.
Oh yeah. Big Laker fan. More so Lakers than Dodgers. The Dodgers are too easy to be a fan of these days. But the Lakers, at least there's some adversity there that I'm proud of my loyal fan base and fanship.
God, I've been following the Lakers and Dodgers for well over 40 plus years. So I remember the days where Norm Nixon and Jamal Wilkes and McAdoo were on the team on the Lakers. It goes back a long time. Yeah.
Yeah. Silk, right? Silk was his nickname.
Oh yeah.
Yeah.
Oh yeah.
Yeah, those were good times. A lot of I saw that winning time the series on HBO. And it was interesting to learn how much the bus changed everything with branded arenas and the cheerleaders, and he really made the business like thrive.
Yeah. Now we'll see what's going to happen when the Dodgers owners take over, because they own the same team. So we'll see what happens there.
Bye bye, LeBron.
No, stop. We all love LeBron. Yeah, we love LeBron.
Yeah.
Until he decides to retire, it's his own. All right, man. Well, thank you again, and thank you for being with us today.
I appreciate it.
Okay.
This was fun. All right, I'll see you soon.